Make a crypto tax video. Cryptocurrency tax. Do we need to know about crypto? Do a video on crypto tax on my Bitcoin, Tom.
I'll do it.
A few moments later.
When it comes to paying less tax, there is something you need to know before anything else. Tax evasion is illegal. Hiding and concealing your income from HMRC is a bad idea. Tax avoidance, on the other hand, well, now you're in my world. There is nothing wrong with legally lowering your income to pay less tax. I can't even go and buy a cucumber for my daughter's sandwiches without overhearing Mavis and Dot talking about the recent profits on their crypto portfolio. It's everywhere you go. No doubt the last few years have seen this asset class hit the headlines and people have made and lost a lot of money. But if you think this anti-establishment, decentralized, middle finger to the man type of investment can't be taxed, well then you'd be wrong. In today's video we are going to be looking at what taxes apply to cryptocurrency and what you can do to keep them as low as possible. We're also going to discuss some of the terrible ideas I've seen around the internet and YouTube on dodging these taxes, and I've even got some little top tips on the topic too. Let's get into it. Wow. Hi, I'm Tom Morgan, a UK-based financial advisor and planner. Welcome back to the channel, or hello if this is your first time with us. We post a new video every week on a range of financial topics, so if that's for you, please hit subscribe. Now remember, this is not financial advice and I'm not an accountant. Most people on YouTube are terrified to death to talk about tax, but I'm feeling brave.
Go gentle on me.
But if you need advice, please seek out a professional tailored to your circumstances. I'm going to split this video into 4 sections, so please feel free to use the timestamps. We're going to look at what taxes apply, the good ideas, the bad ideas, and some top tips. Now let's be clear, I pay a lot of tax every year, certainly my fair share I would say. I am not against paying tax. I am the father of 2 beautiful young children who I hope can get educated so they leave home one day. Love your kids, but yeah. And I like the fact that if I fell off a roof tomorrow, there'd be a team of people ready to put me back together. Why am I on a roof? Now, when it comes to tax on cryptocurrency, you're going to be in one of 2 camps. Either you're mining cryptocurrency or you're trading and investing in cryptocurrency. Most of you are probably in the latter category, and to be absolutely honest with you, the whole concept of mining cryptocurrency still blows my mind. It doesn't matter what definition I read on how mining works. Right. Nope, don't get it. If you're mining cryptocurrency, you're essentially creating it, and HMRC see that as an income, and so income tax will be due. So if you were to mine 1 whole Bitcoin and the value of Bitcoin on that day is £40,000, you can stick £40,000 on top of the rest of your income and you will pay income tax depending on what band or bands that falls into. The current UK income tax rates are on screen now, so depending on what your other income is, you could pay up to 45% on that income from mining cryptocurrency, or in fact even more if you're a really big earner and you start to lose your personal allowance. But that's a topic for another day. Now I'm going to assume that there are more people watching this video that are investing and trading in cryptocurrency rather than mining it. And so for you, it's not income tax we need to worry about, it's capital gains tax. You see, HMRC actually refuse to accept that cryptocurrency is a currency at all. They see it as an asset. And this means they are interested in the profits you make on this asset when you get rid of it, when you sell it or dispose of it. And that is when you need to be aware of capital gains tax. You see, the funny thing here is that even if you could wander down to your local coffee shop, buy yourself a blueberry muffin and a flat white with your Bitcoin, you might actually need to report that transaction to HMRC as a potential capital gain because you're getting rid of your Bitcoin. Bonkers, right? What's more is, say that you actually mined the Bitcoin and you paid income tax at the point that you did that, you held on to that Bitcoin for 1, 2, 3 years, made a healthy profit and came to sell it, you'd still be liable for capital gains tax when you come to sell it too. Double tax. HMRC really are having their cake and eating it. Having their cake and eating it. Is that the phrase? Am I saying it wrong? Hang on a minute. Having cake and eating it too. You can't have it both ways. You can't have the best of both worlds. Yep, that's what I meant. Can't have your cake and eat it. What were we talking about? Crypto tax. So for most people, capital gains tax is the beast that you need to understand. The current rates of UK capital gains tax are on screen now, and actually, compared to a lot of other taxes like, say, income tax, the rates aren't too bad. I was actually pretty convinced they were going to be going up at the last budget, but they didn't. Now, if you're trading and investing in cryptocurrency, while you're holding your cryptocurrency and you're watching the value go up and down faster than a pair of hookers' knickers, you don't actually need to worry about tax at that point. It's only when you come to dispose or sell or get rid of that asset that you need to be aware of capital gains tax. And that also applies if you use your cryptocurrency to roll into another type of cryptocurrency. As far as HMRC are concerned, it is at that point on disposal when you lock in your gains. Now, each individual has a capital gains tax allowance each year, and that allowance currently stands at £12,300. So you're allowed to make £12,300 in profit before you pay any tax. Now remember, this applies to lots of other assets that you might have, not just your crypto. So if you're peddling loads of other stuff and making loads of money elsewhere, then just be aware that your allowance might be being used somewhere else. Now this capital gains tax allowance is use it or lose it each year. So if you're sat on a big crypto portfolio that's full of lots of healthy gains and profit, one thing that you might consider is disposing of it in chunks across multiple tax years to take most advantage of that allowance. If you were to sell some of your crypto portfolio each year and the profit that you realise stays under £12,300, you will pay no tax. If, like me, you've been snapped up by a stone cold hottie, I know, I can't believe I'm married either, then you each have an annual CGT allowance, so spreading your crypto assets between each other could be beneficial when it comes to disposing of them. If you're not married, then what on earth are you waiting for? Nothing says romance quite like, my love, love of my life, will you marry me to lower my capital gains tax bill? What am I doing? Did you lose a small fortune the last time that the crypto bubble went pop back in 2017-18? Well, if so, it's time to swallow your pride and fess up on how much money you lost, because it might help you, might give you a little bit of light relief against the gains that you're currently sitting on. You might be running out of time though. I believe you can claim up to 4 years after the tax year that you disposed of the asset to report the loss. Claiming losses is quite a big topic, so I'll leave a link in the description below that'll take you straight to the Gov website all about claiming losses for capital gains tax. Take a look. Now it's time to bust some myths or simply take a look at some of the terrible ideas that I've seen on how to lower your tax bill on this topic, and some of them that are simply a bit extreme. Move to Mexico. Arriba. It doesn't have to be Mexico, you get the idea. Become a tax exile. Come on, who's considering this? You're sat on a maximum 20% tax on a profit on money that you've made, and you're gonna pack up and leave? Get real. Here's one that I see a lot of, which is keep resetting your starting price by selling and buying. What this means is, don't forget, you're only taxed on the profit. So if you bought some Bitcoin for £1,000 and they're now worth £10,000, it's that £9,000 profit that you're taxed on. So what people suggest that you can do is keep selling to keep yourself under the £12,300 annual allowance each year, and then just keep rebuying it. So sell, rebuy. The problem is this used to work, but the laws changed. They cottoned onto this, something called bed and breakfasting. Don't ask me, I've no idea why, but there is now a 30-day rule. So if you sell an asset, you have to wait 30 days to buy it back. Otherwise, if you buy it back sooner than that, they'll just take the starting price that you had in the first place, and the whole thing's a waste of time. Now, the idea of waiting 30 days to buy back your crypto, given how volatile the crypto market is, I just think is a non-starter. I saw somebody talking about waiting for tax wrappers to be available. What this was about was, at the moment with cryptocurrency, you can't buy and hold cryptocurrency in any tax favourable wrappers like ISAs and pensions. But you know what? I really don't see that changing. Don't forget, the government don't really like cryptocurrency. It's against everything they really stand for. I really don't think it's likely that they're going to give you favourable tax options and ways of holding it more tax efficiently. So again, I think that is a complete red herring. And finally, perhaps the most stupid one of all, just don't tell HMRC. They'll never actually find me, right? I guess they might not find you, but they probably will. But what you've got to remember is most of the platforms that you're probably using to buy and hold and trade your cryptocurrency have to abide by the law and communicate data with HMRC. And I see that happening more and more often. So I really don't think that's a viable option. So don't try and hide from HMRC. Now is not the time to be a renegade. Now, just time for a few top tips from me that might make your tax life a little bit easier when it comes to your cryptocurrency. Now, the first one is be mindful of the number of transactions that you make. The more transactions you do, the more times you buy and sell, the more complicated your tax position comes and the harder it can be to keep track of the numbers. That being said, do not let the tax tail wag the dog. Love that phrase. Do you know, I've been trying to get that into a video ever since I started it. Don't let the tax tail wag. Don't let the tax tail wag the investment dog. Is that right? Well, what I'm trying to say is, don't let your buying and selling of crypto decisions be based around tax. They should be based around investment merit. Don't be so driven by tax that you make decisions solely on that basis. That being said, just as an example, if you buy your cryptocurrency once and hold it and sell it once, that is really, really straightforward from a tax perspective. One more tip is to set aside the amount you're going to have to pay in tax as and when you dispose of the asset. If you sell some cryptocurrency and you know that there's going to be some tax due on it, then put that money to one side and don't spend it on anything else so that you know you've got the cash there to pay your tax bill. The biggest time I see this being a problem is when I see people swapping one cryptocurrency for another. So say you've got some Bitcoin and you swap your holdings in Bitcoin into Ethereum, for example. That is a capital gains tax event on the disposal of your Bitcoin, but the problem that you've got there is you've rolled all of your money into Ethereum. You don't actually have any cash to settle the bill. Something worth thinking about. Now, I've been asked a few times recently, I've had a few people get in touch with me on my Instagram, which I'll link here. Please come give me a follow and talk to me on there. I love hearing from people. I've been asked the question a few times, how do I deliver things so it seems effortlessly to camera? Well, I've got news for you. Now, I assume more people are trading. Jeez, it's the English language, Tom, and you wrote it. Now, even if you could wander down to the local coffee shop and buy yourself a apple strudel, a blueberry muffin and a coffee. What do people buy from coffee shops? Hang on, I've written this down. A blueberry muffin and a flat white. That's what I wanted to say. A blueberry muffin and a flat white. Blah. 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 So for most people trading cryptocurrency, it's capital gains tax that is the beast that you need to understand. The beast that you need to... Do you know what? I need a break. It's the beast that you need to understand. What am I talking about?
Check the mic and make sure it sound right, boys.